Let's move to another JSE-listed company now. It's slightly smaller than Equestra. Its name is Holdsport. Holdsport is the leading nationwide retailer, it says here, of specialist sports and outdoor apparel and equipment. The reason we're talking about this company today is because Coronation put out a SENS announcement today, and I'll read it to you. In compliance, with the Companies Act and Regulation so-and-so, etc. Holdsport received the following notification yesterday: the acquisition of shares by Coronation Asset Management Holdings Limited on behalf of their segregated clients, such that Coronation's total beneficial interest in the company has increased to 25.03%. In the Cape Town studio with me is Dumisho Motlanthe, fund manager at Coronation Fund Management. Your history of your holding in Holdsport, obviously you haven't just bought 25%, you've been building up over a while. Can you go back a bit for us?
Hi Lens, thanks for having me on your show. So Holdsport came to the market in July of 2011, and they have a history of having been a listed player before as More Sport back in 1998. They were taken out and delisted in 2000, and after a sequence of private equity partners, they came back to the market as Ethos wanted to exit their stake. So we've been an anchor tenant pretty much since they came to market, and as you rightly point out, our position has built up from about 15 to 18% if memory serves, and over the last 2 years we have bought as in when we found value.
Has it been good to you? Because I think it peaked in around about September 2012 at 50 Rand a share, and as we look now, it's not the most tradable share in the world, but it's around 46 Rand a share at the moment, so I suppose that's an 8% fall over the year. But in the longer term, has it been good to you?
Indeed it has. I guess relative to the market, we are still concerned obviously that it hasn't outperformed the market, but we have been happy holders. When the stock came to the market, it listed at about 30 to 31 Rand. And so we've had in excess or about 50%, and it is also a decent dividend payer. So we're happy to be shareholders in the company, and we still see the story having legs to play out.
And good management as well, because in that very seat that you're sitting in now, Dumisho, we had the CEO around about 6 months ago, I think, when the results were out. And he had a very sort of relaxed and, but at the same time, authoritarian feel about it. I mean, he was wearing a pair of his own tackies as well. And I just thought, yeah, you can be confident in a company. I didn't know much about the company, but what he had to say was quite impressive. Is that an important part of your decision to increase to 25%, the actual management of the company?
Absolutely, Lindsay. I think Kevin himself, as you rightly point out, is someone who really believes the product and believes in the brand. And so oftentimes when we do meet him, you'll find him not as formally dressed as we are, but sporting the trainers or perhaps wearing one of the First Ascent tops. And really he's proven himself to us as being someone who's been a good steward of capital. He's been with the business a very long time, and he's still a happy holder. I mean, him and along with some of the other executive own in excess of 20%, and that's something we like in a business where management are convinced of the story that they're in and willing to back it up with their own capital.
It's got a couple of big brands. I mean, the biggest brand, of course, is Sportsman's Warehouse. It's got Outdoor Warehouse as well. It's got 53 stores. It's very much a niche player. Is it a defensive stock? I mean, I say this about Woolworths because Woolworths sort of services the higher LSMs in South Africa. Is that the same with this company, Holdsport?
Well, that is part of the appeal, Lindsay. So by way of background, the three divisions are Sportsman's Warehouse, Outdoor Warehouse, and a division called Performance Brands. But really the engine room is Sportsman's Warehouse. R1 billion worth of sales makes up 70% of group sales. And that's the area where, of those 53 stores you mentioned, 35 are in that name. And that is an area where in sporting goods retail, they've been able, as the leaders in consolidation of that market, to continue to push their product. So we find that with the environment as it is at the moment, the higher LSM consumer is the one that we expect to ride it out the best. Another appeal as a result is that this business's top line is not dependent on credit sales and has been saved from having to incur credit losses, bad debts, and writing off a book because a lot of their sales are in cash, in fact the bulk thereof.
You're very active as shareholders at Coronation, I know that. What are you saying to them about growing the business, apart from obviously opening more than the 53 stores they already have? Are you saying go into Africa? What's your strategy for them?
So that is a good question, Lindsay. I think under the auspices of having been under private equity, they were probably constrained by a balance sheet that was heavily indebted, and they would have been very risk averse in the way they would have gone about store rollout. So 53 stores isn't any big number by a stretch of the imagination, but we see them as having the platform, given the cash generation of the business, to push on.
We had a figure out yesterday from the from RMB and BER, the Business Confidence Index for the third quarter, and the retail sub-index within that index itself rose by 8 points. I found that quite surprising given the relatively stretched state of the South African consumer. Does it worry you that really you're at the mercy, despite what you've said about the higher LSMs, you're at the mercy of the South African economy? And surely the one thing that you won't do if you are a little bit stretched is go out and buy a new pair of 1,200 Rand tackies.
Sure, that is definitely a concern for us, Lindsay, and especially in an environment as competitive as sporting goods retail. I think what the business has in its favor is just the ease with which the discretionary spend can be moved around. So when you're thinking of a time where things are expanding and you can buy your luxury cars or your big houses, those things will likely taper off first. But these people still have families, they have children that are playing sports and continuing to do outdoor activities year after year. And so there is a bit of defensiveness in the top line, along with good management of costs. They've been very frugal in terms of where they put their stores, and looking after the cost base is also a thing that they can do in this moment as we go through tough times.
And of course, it's a nice little bite-sized chunk for one of the bigger retailers. It could be a takeover target.
I mean, that is very possible. We ourselves, we like the story. And in terms of fit, I think some of the groups have understood the complexities of the business in terms of looking after your supply chain, inventory management, and realistically having to employ employees in your business that know a bit about footwear or a bit about certain types of equipment. So that in itself is something that should other businesses have to consider taking the business out, they'll have to take that into mind.
Demisha, thanks very much for coming in this lunchtime. That's Demisha Motlanthe from Coronation Fund Managers. We're going to